Assalamualaikum warahmatullahi wabarakatuh. I hope you are in the pink of health. Greeting to my respectful lecturer, Professor Madya Dr. Abdul Hisham. First, let me introduce to our group member. I am Shazwani binti Ayub, and then we have Nur Afrina Shasha binti Ramli, then Hanifah binti Izzuddin Hussein, then Muhammad Rais Fazli bin Muhammad Adnan, and lastly Muhammad Nur Nashid bin Muhammad Alim. Today, we will talk regarding a few subtopics that we have learned in the course of Islamic Finance, FIN 546. The topic that we will present include Chapter 1, Shariah Framework, and then difference between Islamic and conventional finance, Chapter 2, Musharakah, Chapter 3, Institutions and Market, Chapter 4, Sources of Fund. Let's begin. First and foremost, I am Shazwani. I will talk regarding the Shariah Framework. What is Shariah? Shariah in literally means the road to watering place or the straight path to be followed. Al-Qurtubi defines Shariah as the canon of Islamic law, different commandment of Allah Subhanahu Wa Taala to mankind. There are three components of Shariah. The first one is Al-Ahkam Itikadiyah, which is sanction relating to belief and faith. And the second one is Al-Ahkam Al-Akhlaqiyah, which is sanction relating to moral and ethic. And the third one is Al-Ahkam Al-Amaliyah, sanction relating to the saying, doing of the individual and his relation with others. Next, I will present regarding the sources of Islamic law. The sources are divided into two categories. The first one is the primary sources. Firstly is Al-Quran, defined as the speech of Allah sent upon the last Prophet Muhammad in its precise wording and meaning transmitted to us through numerous narrators. The second one is Sunnah, literally means clear path or written track, refers to all that narrated from Prophet Sallallahu Alaihi Wasallam, including his action, saying, and tacit approval. A third one is Ijma', literally means to determine and to agree upon something, defined as the unanimous agreement of the mujtahid of the Muslim community of any period following the demise of Prophet Muhammad on any matters. The third one is Qiyas, literally means measuring or ascertaining the length, width, or quality of something, defined as the extension of Shariah ruling from the original case to a new case because the latter has the same effective cause. The second types of source is secondary, which is the first one, Maslahah Mursalah, literally means benefit or interest, defined as the consideration which secure benefits or prevent harm but at the same time remain harmonious with the aim and objective of Shariah. The second one is Istisan, literally means to approve or to deem something preferable, to consider something as good, defined as the legal principle which authorizes the departure from established precedent in favor of different ruling for a reason stronger than the one which is obtained in precedent. The third one is Istisab, literally means companionship, defined as the fact, rule, law, and reason whose existence or non-existence have been proven in the past presumed to remain, so for the absence of evidence establishes any change. The fourth one is Urf, literally means to know, defined as collective recognized and practice regarding words and actions to either be done or avoided. The fourth one is the side Al-Adarai, literally means blocking and obtaining a certain end, defined as the blocking the means to an expected end which is likely to materialize if such mean is not blocked. Next is Amal al-Madinah, literally means as the practice of people of the Madinah. Moreover is Qab al-Sahabi, the legal opinion of a companion of the Prophet Sallallahu Alaihi Wasallam. Lastly is Shar Man Qablana, the legal provision found in the divine scriptures prior to Quran. The next thing that I'm going to talk about is regarding the Maqasid Shariah. Literally means the higher objective of Islamic law, according to Ibn Ashur, defined as a deeper meaning and the inner aspect of wisdom considered by the lawgiver in all or most of the area in circumstances of legislation. The objective of Shariah is to govern human life and protect the interests and benefit of the people. There are two types of higher objective of Islamic law. The first one is religious or spiritual objective pertaining to the hereafter, and the second one is worldly objective pertaining to mundane affair of this world.
Assalamualaikum, I am Hanifa binti Izauddin Hussein. I will be presenting about the differences between Islamic finance and the conventional finance. So for the definition of Islamic finance is the type of financing activities that must comply with Shariah, which is the Islamic law. There are many modes of Islamic finance, such as Musharakah, that is profit and loss sharing, Wadiyah, safekeeping, Musharakah, joint venture, Murabaha, cost plus, and Ijarah, that is leasing. Islamic finance prohibits the riba, which is an increasement in the liquid of tangible assets, such as cash and debt, which leads an exchangement price other than the par value. So for the conventional finance definition it is a home financing scheme which offered by the financial institution or banks which are not guaranteed by the government agencies. So this is where the lenders lend to the borrowers, which make the profit from the interest charged from the principal amount. The interest rate can be a fixed rate or based on the floating rate. The contract is not based on an absolute value, which is the sale price. So moving on, the first differences is through the value proposition. So the value proposition for Islamic finance is not for making profits, but it focuses on bringing benefits for both of the parties through the partnership, which brings mutual benefits such as the profit and loss sharing. Next, it is mainly involves on the ethical investing and the green business, which is highly emphasized in the Maqasid Shariah. Next is Islamic finance products are protected from the manipulations in the financial market. As for the conventional finance value proposition is for focusing on consumer-friendly customer services, which aimed on attracting more customers through the goals of maximizing their profits. And it involves the socio-economically for the benefits of the customers as well. Moving on to the structure. The structure of Islamic finance is when the principle of sources and application of funds in the Islamic finance are developed. A single flow should be formed between the deposits and the funding or the use of funds through the investment, which this may lead to no distinctive role between the means. And the structure of profits and sharing, it is the alternative for the management system for the banks, but it cannot be fulfilled 100% effectively by all of the Islamic banks. Next is for the conventional finance structure. This is where the deposit collection and the lending are the goal of the institution, which this is the recognition of the shareholders. The treasury function handles two very different functions, which are collecting the deposits and giving loans. This function seeks the balance returns for the shareholders' funds. Moving on to the operational mechanism. So for the Islamic finance, it avoids riba, which is the interest-based transaction. It also has the core of the scheme, which is the prohibition on earning and paying the interest. Adding to that, Islamic finance is not limited on banking, but it also covers on insurance, capital marketing, and all other types of financial intermediaries. For the conventional operational mechanism, it makes the profits from the interest charge. The contract is also not based on the absolute price, which is the selling price, and the interest can either be fixed or based on the floating rate. They achieve the maximization of the shareholders' wealth through the interest differential, where they maximize the shareholders' capital by increasing the interest rate. The instrument offered for both of the Islamic finance and the conventional finance. So the first type of instrument offered is the nature of asset backing. In the Islamic finance, it has the tangible asset which must be free from gharar, that is uncertainty. So next is for the conventional finance. It is on tangible asset which they have a legal claims on future benefits. The second type of instrument offered is the relationship. In Islamic finance, it offers partnership agency, buyer and seller. However, in conventional finance, it offers borrower and lender. Next is the risk facing. In Islamic finance, they offers a risk taking which they share the risk. However, in conventional, they does not share the risk. And moving on to the existing divine for the regulation. In the Islamic finance, the financier must bear with the risk of the profit. However, in conventional, the financiers does not share the risk, and the risk is transferred fully to the client. Moving on to the existence of the divine regulation. In the Islamic finance, it is governed by a divine law and ethical principle. However, in the conventional finance, it does not regulated by any divine law or any ethical guidelines. Lastly is the extent of contractual condition. In Islamic finance, it does not have many contractual rulings or principle in order to make them valid. However, in conventional, it is governed by many contractual rulings. Both of the finance in the Islamic and conventional consist their own advantages and disadvantages. The differences can be referred in many ways, such as value proposition, operational mechanism, structure, and instrument offered. So with these differences, it may bring many benefits to the economy.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Nur Nashrin bin Muhalim, the presenter that will explain Shariah contract for Islamic financial system from the perspective of Musharakah, means partnership. Okay, next I will explain what is Musharakah. Musharakah, the definition of Musharakah. First of all, Musharakah is also known as Shariah, literally the intermingling of properties whereby one cannot be differentiated from the others, and mixing of two properties so they could not be distinguished from each other. The Arabic word Musharakah literally means sharing, participation and mixing share of two or more parties. Technically, it refers to a partnership between two or more persons through contractual relationship or by operation of Islamic law. In Musharakah, all partners will get the profit and bear the loss which arise from partnership. Okay, next we go through to the evidence about Musharakah, means partnership. In Al-Quran, in Surah An-Nisa, verse number 12. أعوذ بالله من الشيطان الرجيم فإن كانوا أكثر من ذلك فهم شركاء في الثلث, means that if there are more than one, they all will share 1/3 of the estate. And from the perspective of hadith, from the narration of Abu Hurairah said that the Prophet Muhammad sallallahu alaihi wasallam said, God the Most High said, I am the third partner to two partners as long as one of them does not betray the other. If they betray each other, I leave them. Sunnah Abu Dawud. Okay, Next, we go through to the types of Musharakah. There is two types of Musharakah. First is the Shirkah al-Milk, is meaning partnership in joint ownership, and second is Shirk al-Aqd, means contractual partnership. Okay, for the first Shirk al-Milk, it means the joint ownership of two or more persons in a particular property. The basic feature of Shirk al-Milk is to mix the ownership either by choice or mandatory. If two or more persons purchase an asset jointly, they become the owner of the asset. This partnership comes into existence as their own choice because they themselves choose to purchase the asset jointly. In second type of Shirkah al-Milk, the partnership is established mandatorily or automatically without any effort or action of the parties. For example, after the death of person, all his heirs become the new owners of his property. They become the joint owner through the law of inheritance without any effort or action. Okay, next we go through to the second Musharakah. Type of Musharakah, it is Shirkah al-Aqd. It means contractual partnership. Shirkah al-Aqd is a type of partnership which is established by the mutual contract of the parties. It is most widely used in business transaction and can be translated as a contractual partnership or joint commercial enterprise. Basically, it is an agreement between two or more people to combine their asset, labor, or liabilities for the purpose of profit making. All the parties enter in partnership contract willingly and share the profit and loss of the joint venture. In contractual partnership, the partners may contribute capital, reputation, or services. From this perspective, the contractual partnership can be further divided into three categories. First of all, partnership in capital. In Arabic, we call it Shirk al-Amwal. It is type of partnership where all the partners contribute some capital into the commercial enterprise. Second, partnership is partnership in service, Shirkah al-Amal. It's a type of partnership where all the partners jointly undertake to provide the service, labor, and fee charge from the customer is distributed among them according to an agreed ratio. This form of partnership does not require to contribute money capital. For example, if two persons agree to provide tailoring services to their customer, the wage earned from them will go to joint pool and distribute among the partners according to their agreement. And the third is partnership in goodwill or reputation. In Arabic, we call it Shirkah al-Wujuh. It is a type of partnership where the partner have no investment at all. They purchase the commodities on lower deferred price based on their reputation or credit worthiness and sell them on spot. The profit is shared among the partners according to the agreement. In this type of partnership, the partners do not have to invest in the form of capital, but they need to determine the liabilities of each partner and profit sharing relationship. Last but not least, dissolution of Musharakah. When this dissolution of Musharakah happen, when a partnership fulfill its obligation or when its duration expired. Second, by mutual consent of the parties. Third, by a request made by one of the parties which is subsequently approved by other parties. And number four, by death or incapacity of one of the parties whose heirs or the guardian decide to continue the partnership. And last but not least, the bankruptcy of the partners. That's all from me, Muhammad Anashrik bin Halim, and thank you.
Okay, now I want to talk about the chapter 3, which is institution and markets, and I will present about the Islamic financial institution. Okay, Islamic financial institution is the blanket term for all financial institutions that operates in line with the Shariah, and it comprises of 5, which is Islamic banks, Islamic insurance, which is Takaful, Islamic unit trust, other finance companies, and Islamic institution of Waqaf. For the Islamic banks, the meaning is any company which carries on Islamic banking business and holds a valid license and all the offices and branches of such a bank shall be deemed to be a bank. Also, for the Islamic banking business, means banking business whose aims and operation do not involve any element which is not allowed by the religions of Islam. Okay, we can see the financial institution that offering Islamic banking services is such as Islamic banks, commercial banks, and investment banks. Islamic banking in Malaysia replication of basic strategy with transforming the sources and application of funds of conventional banks into Islamically acceptable products. Example for Islamic banking institution in Malaysia is Bank Islam Malaysia Berhad, Bank Muamalat Malaysia Berhad, and Maybank Islam Berhad. Also, there are 3 types of Islamic banks, which is interest-free banking schemes, Islamic subsidiaries, and full-fledged Islamic bank. Okay, second is Islamic insurance or takaful. Takaful is an Islamic insurance concept which is grounded in Islamic muamalats, observing the rules and regulations of Islamic law. In principle, the takaful system is based on mutual cooperation or ta'awun, donation or tabarru, responsibility, assurance, protections, and assistance between group of participants. The purpose of this system is not profit but to uphold the principle of bear one another burdens. For example, such as riba, which is interest, al-ghara, which is uncertainty, and al-maisir, which is gambling, we will avoid. Also, they have a takaful model, which is wakalai model, mudarabah model, and combination of both model. In Malaysia, we have Etika Takaful Berhad, Syarikat Takaful Berhad, and Takaful Ikhlas Sendirian Berhad as our takaful companies. Okay, next is Islamic Unit Trust. Okay, unit trust is a collective investment vehicles which pools investors' capital into a funds managed by professional managers. The main objective for Islamic Unit Trust is to invest in a portfolio of halal stocks which comply with the principle of the Shariah. The returns of the Islamic Unit Trust will also avoid the incidence of riba through the process of cleansing by the removal of such amounts representing the interest elements. And such proceeds are normally donated to charities. Okay, the fourth is other finance company, which is venture capital companies and lembaga urusan tabung haji. Okay, for the venture capital companies is a type of private equity capital typically provided to immature, high potential growth companies in the interest of generating a return through an eventual realization events. Venture capital is most attractive for new companies with limited operating history that are too small to raise capital. We can see the venture capital is a person or investment firm that makes venture investments, and they are expected to bring management and technical expertise as well as capital to their investments. Okay, BIMB Venture Capital Sdn Bhd, First Floor Capital Sdn Bhd, and Maybank Venture Sdn Bhd is example for the ventures capitalist companies. Okay, for lembaga urusan tabung haji, this corporation is to manage the saving of Muslim intending to perform the Hajj pilgrimage. The objective tabung haji is enable Muslim to gradually save enough money to meet the cost of performing the Hajj or other beneficial expenses. Also, enable Muslim through the use of their saving to take active part in capital investment in a way halal to Islam. And lastly is provide protection, supervision and welfare to Hajj pilgrims. Okay, the last is Islamic Institution of Waqf. The Quran enlightened on two built-in stabilizers that helps to solve the problems of poverty, which is zakat and waqf. Okay, for zakat, which channels funds from the rich and redistributes the proceeds to poor, the needy and others Quran designated causes. For waqf, it's like the voluntary donation that can help to shoulder the financing of major public schemes that are currently financed through taxation and fiscal spending. And also, wakaf is a possible complement to state-owned financial institutions. In Islamic history, wakaf play a dominant role in providing public goods like education and healthcare. They can be supplemented by zakat collections waiting for distribution to those who deserve it. The zakat wakaf sector can devote itself especially to financing the poor. The interface of zakat wakaf establishment with profit-motivated financial institution could be through technical support and international guarantees. Also, we can see more than 60% of the Quran emphasize on Muslims to spend liberally in the way of Allah SWT. We need to use our money with the right way with help others people who really need it.
There are 5 sources of funds in the Islamic banking operations and instruments, which are savings deposit, current deposit, term deposit, investment deposit, and underlying contracts for savings and current deposit. First is the savings deposit. The Shariah principles applicable to saving account are Al-Wadi'ah, Al-Qard Hasan, and Mudarabah. There are 2 types of Wadi'ah. Firstly is the Wadi'ah Yad Amanah, or also known as trustee safe custody. In this savings deposit, the custodian is a trustee. The deposited asset or property must be kept separately from other assets or funds, which is no poolings of funds, and the assets cannot be mixed with one another. The custodian has no right to use or trade with the asset, and the custodian is not liable for loss or damage to the asset unless caused by his own negligence. On the other hand, Wadi'ah Yad Damana is a guaranteed safe custody. The custodian is a trustee and guarantor to safeguard the deposited asset. The customer allows the bank to utilize its funds limited to halal ventures and in compliance with the Shariah, provided that all profits and losses is the responsibility of the bank. The bank may provide incentive in the form of bonuses or hibah to the customer, provided that the amount is not agreed in advance and is granted voluntarily. Wadi'ah Yad Damana is like the Al-Qard principle. The next savings deposit is the card-based savings deposit. The money deposited in the bank account by the depositors is treated as a form of benevolent loan to the bank. The bank is entitled to use these deposit funds at its own risk without any authorizations from the depositors. The bank only owes the principal amount borrowed from the depositor. The principal amount is guaranteed by the bank to the depositors even if there is negligence or loss of wealth from the side of the bank, and no dividends are due in this deposit. The third one is the Mudarabah deposit, where the depositors who act as the Rabul Mal deposit his money to the bank, which acts as Mudarib, that will subsequently use the money for investment purposes. The distributions of profit between the bank and the depositor is accordance to a mutually pre-agreed profit sharing ratio that must be disclosed and agreed upfront by both parties. The capital of depositor is not guaranteed since any financial loss shall be borne entirely by the depositors, and unless proven negligent or there is a breach of the terms of the Mudarabah contract on the part of the bank. The second source of funds is the current deposit. There are 3 Shariah principles in the current account. Firstly is the current account based on Wadi'ah. The Wadi'ah Yad Damana concept is utilized when the bank pools and utilize the fund. The second one is the current account based on Qardu Hasan. The deposits are treated as Qardu or a benevolent loan by the depositors. And the third one is the current account based on Mudarabah. Customer will provide capital or deposit and the bank act as entrepreneur. This is to enable the bank to carry out business projects which will be on a profit-sharing basis. In case of losses, the losses are to be borne by the customer. The third sources of funds is the term deposit. It is a type of arrangement where the customer's deposits are held at a bank for a fixed term. These deposits will be deposited to a number of investment pools where it will be invested in business activities which are accordance to the Shariah. It is a short-term deposit where the maturities are within a period of 1 month to a few years. It is based on Wakalah, Murabaha, and Mudarabah.
using the principles of wakalah and murabaha in the term deposit, under the contract of murabaha, the Islamic banks offers an Islamic fixed deposit returns to depositors. The customer may place certain amount of cash, for example, RM10,000 for a certain period of time such as 3 months. Once deposited, the customer deposit can be determined based on their respective deposit amount. For example, the CIMB Islamic Advanced Profit Fixed Return Investment Account. The last sources of fund is the investment deposit. There are 2 Shariah principles in the investment account. Firstly is the general investment account, or also known as Musharakah mutlaqah. In the general investment account, the Musharakah arrangement is of general mandate, or the ratio of profit sharing more or less standard, advertised as a ready package between bank and customer. It is a non-negotiable profit sharing, and the minimum investment is lower than the special investment account. Next, the special investments account, or also known as Musharakah muqayyada, is where the customer can place restrictions to the bank as to the type of dealing or project that the bank can enter with the capital given. The special investment account is a negotiable profit sharing, and the minimum investment is higher than the general investment account.